Welcome to Debunking VA Home Loan Myths. Thank you so much for attending today. This session is also going to be recorded, so if you will be able to check this a little bit later. Please drop what city and state you're joining us from, and any questions you might have about the VA home loan process. Because today we're going to go through a lot of information that you can implement into your business immediately working with the veteran community. So let me just pull up my chat just to make sure I could see that. Then yeah, you guys just go into that Q&A tab and we'll be able to answer any questions that you have. So let me go through the agenda so you guys have an idea of some of the topics that we're going to be talking about. And then also you guys will have my contact information when we get towards the end. So my background is Director of Government Lending at Waterman Bank. I'm also an Army veteran, have served for the last 15 years and specialize in working with veterans across the country. So the three main things we're going to be talking about is going to be the VA condo approval process. We're going to talk about the appraisal process and the VA loan qualification myths. Now, this is a compilation of a lot of the questions that I get talking with listing agents, no matter where they're located across the country. And I also have a lot of additional educational videos around using the VA home loan on my YouTube channel, VA Housing Education. And again, if you guys have any questions, please drop them down in the comment section. So the first part we're going to talk about is the VA condo approvals. Now, this is one of the easiest approval processes across all loan types. And I'm going to explain why that is, because when we talk with people, they always make it seem like it's a nightmare of a process. None of them get approved, and it takes 60 to 90 days to complete that. Now, another misconception is that if a condo is FHA approved, it will be VA approved. That is 100% not the case, because they have two different requirements. And I'm going to show you guys in the next slide a comparison on understanding conventional FHA and VA condo approvals and the requirements that they have. A big difference when it comes to VA condo approvals is they require a blanket approval. What that basically means is that when you look at a condo, like a conventional loan, they require what's called a spot approval. So every time a loan is done in that building, lenders requesting condo questionnaire, all the documents from that association. But when it comes to a VA or FHA approval, they actually do a blanket approval of the entire building, or they deny the entire building. Now, there's definitely going to be some differences with FHA and VA, which I'm going to explain here next. So we'll pop right back to it. The cool part about VA condos is they never expire. So once a condo is VA approved, it's VA approved for life, and the lender just needs to get updated insurance in order to lend in that building, which is both great and scary at the same time, because if they change the rules or the building's in bad financial position, that can do harm to a veteran. So kind of keep that in mind. There's two main things that disqualify a condo from VA approval, which is right of first refusal, right of first option, kind of the same thing. That's where if you, and I'm not an attorney, by the way, so, you know, we want to consult an attorney about all this stuff, but right of first refusal basically means that if I want to sell my unit, I get an offer on that property and I'm going to accept it, I have to let the association know if they would want to buy it at the same terms or not. It used to be really popular back in the day, and it also prevents people from trying to sell properties at a heavily discounted rate, especially with condos, because as you know, if there's low sales in the building, it does reduce the overall value of a property. The other part is if having leasing restrictions, which a lot of buildings will have that, like you can't rent more than 10%. The association needs to review anybody that applies for a rental. All of those things would cause a denial of a VA building. And but they do allow no Airbnb and no short-term rentals, or having like a 12-month minimum lease. They do allow for that. So that is something that you can do. Now, with all that being said, why I say it's the easiest approval process, because literally a veteran can buy any condo that they want, even if it's denied by the VA. If it's already denied by the VA in the last 2 years, it's even easier because you just submit a waiver. We do those, but a lot of people don't. We also do the VA condo approval process ourselves. We don't actually outsource that to like a condo department or somewhere else where they're charging you $1,000 or $1,500. We take care of that for you as well. And that process typically takes about 2 weeks to complete. So a lot of times veterans that are looking for condos uh, anywhere across the country, they're able to just pick any condo that they want and be able to close in that condominium. So a lot of big benefits to that. And this is why I say it's one of the easiest processes that exists. Now, there's definitely what you need to understand, which a lot of people don't, is a lot of times the word townhouse gets thrown out into the community. The thing with townhomes is that either they're going to be considered a condo, a planned unit development, or they're going to be considered a single family attached building. So it has to be one of those three. Planned unit development and a single family attached residence are treated like a single family home. So they don't require condo approval. A condo will require that VA condo approval, even if it's a detached condo, which if maybe in your market you don't have them, but we've definitely seen those type of properties. So you can definitely, you can go into a subdivision and you might be seeing single families, but not realize that it is a condominium. And HOA dues don't always dictate like the how much the amount is to tell you if it's a condo or not. There's a pop-up question that we have, so I can answer that. What about a rule where veterans will only pay 1% of their mortgage closing costs? VA loans are now known as lender-funded loans. They have to pay high interest rates, so the lender pays the rest of the closing costs with the premium financing. So I'm going to answer that question live for you guys. So the thing is that 1% rule is based on lender fees and like title fees. There's a couple pieces that go into that 1% origination, max origination fee, but there's no cost. There's no cap on. There's no seller paid closing costs that have to go into that. The only time you really run into that, to be honest, is any loan amounts under 250. Then yeah, you would require some type of credit from the sellers to be able to offset this 1% rule. But we rarely, I mean, like very rarely ever run into that issue. But no, this 1% only applies to certain fees. So a lot of times we don't even see this come up. So thank you for that question. If you guys have any more, please drop them down below. So let me show you guys what it looks like for the different type of approvals. So this is a conventional FHA and a VA condo approval process. So as you see, the VA really has no requirements, because some people will say, well, the VA has really tight requirements for, what the residual or the, I'm sorry, for the budget. Well, the VA doesn't even really look at that, because again, the veteran is the one that's coming into this. Approvals are for a lifetime. They don't worry about delinquency rates, reserve contributions, where conventional and FHA do. And with FHA, you do have to get that rechecked every time you do a mortgage in there. So it's kind of like redundant. You do a blanket approval, plus you need to do a spot approval in there. So let me know if you guys have any questions on that piece. Next part that we always get questions on, the number one question is the appraisal process. So we're going to break that down. Now, how an appraiser determines a value is typically going to be looser than other products. Now, what is tighter is going to be the property condition. Okay. So I'm going to kind of break down these three things: the time of an appraisal, the condition of appraisal, and then the value. Value, if you ever look at the VA handbook, remember, these appraisers are just basically contracted by the VA because they went through the approval process and they do other types of loans. So when it comes to determining a value of a property, they have more flexibility to be able to go out further and to be able to make things work. The property condition is going to be tighter than a conventional loan for sure. And the timeline varies, but typically it's going to be 10 business days from the time the appraisal is accepted. Now, most appraisals are accepted the same day, and then the timeline starts. This is why we always say when you're going through a transaction is to order the appraisal as soon as possible so you can get over the time frame and get to a 20-day closing, because that's typically what it takes. I mean, 20 to 25 days on a regular purchase, up to 30 days if the condo needs VA approval. And also, so that'll just kind of hold things up. Normally, you shouldn't need to go past that. All right, next thing we're going to talk about is going to be subject to repairs. So one of the things is always that people have questions on is if there's issues with an appraisal, the typical things that we normally see is like peeling paint, broken windows, and termite issues. Now, peeling paint and broken windows typically can be escrowed. So what that basically means is that the VA came out with this not too long ago. So if a buyer wants to do the repairs per the appraisal themselves, as long as they're not causing a safety issue, then they're able to set up the money themselves, depending on the lender, and be able to fund the project themselves with getting an estimate. So a lender is going to hold back about 1.5 times the repair cost. So it's another great option to make veterans more competitive. Another thing that veterans can do is if there's a barn or a garage, dilapidated garage or a shed on the property, and the appraiser's asking them to fix it, they can actually ask the VA through their lender to omit the structure, so they don't have to make the repairs to that structure. But just know that then that structure won't count as value towards the property. And we touched on escrow holdbacks. Again, if you have some repair items and the lender's willing to do the escrow holdback for it, typically they have to complete that work within a couple weeks of accepting that. Another thing is that the appraisal is good for 6 months on a property and sticks with the veteran and not the property. One sticking point for a lot of folks is the VA mandatory escape clause. If you guys ever read those, it basically allows people to, if the value comes in low, to walk away from a building, walk away from a contract and get their earnest money back. That is a true statement. It's on there. But we also run into a lot of veterans that are willing to pay the difference. Just sellers think that they're not going to. So that's just something that you definitely discuss that with your team to see how that works. And somebody asked a question about can termite issues be held back? Also, termite issues, they won't. Those will have, from my experience, the termite issues always have to get resolved before we can do. And then Mary asked, can we talk about assuming a VA loan? I'll talk about that a little bit later, because I know Mike Lorino with Assume List has done a lot of these as well. And I did a video with him not too long ago talking about second mortgages for assumable loans. But I can go on that once we finish up the presentation when we do our Q&A. Another thing with VA appraisals, unlike other loan products, if the appraiser can't get the value of a property, they issue what's called Tidewater. Now, Tidewater is where the appraiser notifies the lender and lets them know, hey, I can't come up with the value for the property. Have the agent send me comps, at least 3 comps that I can use to support the value. Now, they give 2 business days for you to return those comps, and the lender is going to reach out to the agent. Why it's important to do this is because some agents won't submit it. They'll be like, well, no one's ever told me that I have to do something like this. I'm not going to do it. And then the value just comes in low. Most of the time, again, from my experience, when they request it, they just want to be able to see comps that could support it. And majority of the time, they come back at value or higher. So again, you're just helping the appraiser out. Now, if the value comes in low after they've issued the Tidewater, you provided the information, they issued the appraisal, and it still comes in low, you can reach out to the VA Regional Loan Center and get a reconsideration of value. I really haven't seen people go that distance to be able to get things updated. Let's talk about some of the myths that are out there. Stigmas around veterans not having no money down, meaning they're less qualified than someone doing a 50% down payment. Well, the reality is that they're both equally qualified. I think what happens is that, they'll be like, well, if the value comes in short, well, the veteran's not going to have enough money. Well, we have veterans buying $1 million to $2 million properties all the time, and they're doing 50% down payments, 40, 30% down payments. So it's definitely not the case. You just have to be able to ask the lender who did their pre-approval to make sure that they're actually qualified. Another stigma is that, or misconception, is sellers need to pay extra money, like we talked about a little bit earlier when someone asked a question about there's a max of 1%. And also viewed as like lender funded loans. I'm not really sure because that we've never seen that before, right? It's the seller used to have to pay some extra money, like as far as getting a termite inspection, but veterans can pay for that now, so that doesn't exist anymore. Doing the repairs to the property, now you can do escrow holdbacks for certain items. So like they've eliminated a lot of those things that a lot of people had issues with or made veterans less competitive. So that's just something to keep in mind. And there's also, if you're in more rural areas, no more private road agreements are needed. This would definitely be an issue for a lot of folks. And that veterans can't buy as is properties, and they definitely can. The house just needs to be functional, right? It can't be like dilapidated. It just needs functionality to it. Like when I bought my place, I knew it was a fixer upper, no issues. I had two of my other buddies buy places, were like, this is never going to pass appraisal, and it passed it with flying colors. So, definitely give it an opportunity to be able to go through that process. And then a lot of veterans also disqualify themselves. They say, I can't have more than one VA home loan. I have to sell another property to qualify. That is not true. Veterans do have the ability to have multiple VA home loans. Another thing I'll touch on is that as of August 10th, the VA has come up letting veterans be able to pay real estate commission fees. I know that's been a subject. A lot of people have questions on that. So if the contract was executed prior to August 10th, then the veteran cannot pay a real estate commission fee no matter what. You would have to re-sign the agreement on a current date in order for them now to be obligated to the new rules. So keep that in mind. But yeah, they can pay any of the fees as normal. I'll drop my contact information here as well, and I'll also drop it down in the chat here in a little bit. But I'll open it up to Q&A because there's a lot of things that we can talk about. I could talk about the assumable mortgage. Someone mentioned if home is dilapidated, do you offer the VA renovation loan? Yes, we do offer them. But it's just a process because you do need a HUD consultant similar to an FHA loan. So let me touch on assumable mortgages. So you guys, I know somebody had a question about that. So all VA home loans are assumable. The assumption process, the way it works is that if anybody could assume a VA loan, but how the assumption process works will be different based on who it is. So if I'm like me, I'm a veteran. Let's say I didn't use my VA home loan, and I want to be able to assume someone else's loan for $400,000 and they're selling it for $500,000, right? I'd be able to assume the $400,000 piece and then give them the $100,000 in cash or get a second mortgage, which at that point, 10% minimum down, $50,000 second mortgage, and then put $50,000 down and then go through that entire process of assuming it and swapping benefits, meaning I put my benefits onto the seller's property. The seller frees up their benefits to be able to purchase and use their VA home loan. But just keep in mind, if in that scenario, the sellers will not be able to use their VA home loan again for another 60 to 90 days from the time they close. Because I know sometimes they want to turn around really quick, but it doesn't work exactly like that. It does definitely takes time to do that. And a non-veteran can assume, or even a veteran, as long as they're not doing a substitution of entitlement, can assume another veteran's VA home loan and lock in their entitlement and assume it as an investment property. We do see a lot of that. Again, with Assume Lists, we work with them a lot. We see this actually more often than not right now because you have a lot of veterans that are not going to be using their VA home loan entitlement anymore, and they want to be able to get a premium on their property, so they're doing it that way. Let's see, we had some questions here. Then someone says the VA appraisal stays with the property, and I'm saying it stays with the VA. So I called the VA on this the other day, and this is what I was told, which this is something that we knew about for a while, because we had this happen where someone was switching lenders, and they wanted to get like, hey, can we just use the old appraisal? And no, we couldn't. We had to order a new appraisal on the property because it's stuck with the veteran. Again, like that's according to the VA. So they're asking now, how can a vet have more than one VA home loan? So so veteran can have unlimited VA loans. I have one right now that has 4 VA home loans. And the reason why that exists is because you have a max entitlement, and then anything over that entitlement requires a 25% down payment. So I'm going to explain that because I know that's not a lot. So there's 2 sets of rules. One, if you don't have an outstanding VA loan at the time of closing, there's no limit on how much you can purchase. If you want to buy a $5 million property, you can purchase a $5 million property and put 0 money down. But let's say you buy that $5 million property, you've exhausted your entire entitlement, because entitlement is based on the Fannie Mae single family loan limit based on the county that you live in. So some counties you have more entitlement than others. Okay. So after a veteran's exhausted their benefits and they want to keep that property, well, they would, any property moving forward, they would have to put a 25% down payment. And they can also refinance a non-VA loan into a VA loan as well, because that's what a lot of veterans get steered away from, using the VA loan for whatever reason. And then they end up refinancing back into a VA loan. So that's also possible. And you can do that. Another example would be is if you're in a regular Fannie Mae single family loan limit area of 766,550. So let's say, example, you buy a place for $266,550. You have $500,000 left in entitlement. Well, you could buy another property for 100% financing at $500,000. But if you buy a place for $600,000, you have to do a 25% difference of the remaining entitlement and the purchase price. So in this example, $100,000 would be the difference. So you have to put $25,000 in order to use your VA home loan. The benefits of a VA home loan are in the qualifications themselves. So we see veterans that I have 20% down, I could do a conventional loan, but they actually can't because of what their financial picture looks like. But where the VA loan's a lot looser, then you're able to do that. So a lot of good information on that. You guys have more questions for me? Drop them down in the comment section, and then I will drop them down. I'll drop the information in the chat as well. If you guys have questions, because I do loans across the country, I'm happy to, if you guys have a problem with a client, there's some kind of issue that's coming up, you don't know how to do it, how to do something, I'll be able to just jump in, spend 5-10 minutes with me, walk me through your situation, and I'll walk you through a solution on that. No, perfect. They're going to be also uploading the video onto the lab code agents. Somebody had another questions. Are you referring to ratios when you're saying looser? Yeah. So VA loans look at what's called residual income primarily. Okay. So a DTI could be 70% and someone can still qualify. Well, why is that? Because the VA is looking based on where you live in the country, based on how many dependents you have. So a spouse is a dependent, plus every child is a dependent. It's going to say, well, this is how much money you need to make net after all your expenses. And they also factor in 14 cents per square foot for residual purposes. This is another big mistake that lenders don't do, is they don't account for that. And then the loans can get denied, a week before closing. So that's something to keep in mind. Active duty, someone on active duty typically will have both the residual requirement plus a max of 55% back-end DTI. Someone had a question of a civilian who assumes a VA loan has to qualify using VA loan qualifications. Yes, that is another big bonus of using the VA loan, because again, much looser requirements than a conventional loan based on how they qualify you. Another big benefit of the VA loan that people will use is on a departing residence, right? If I have a house right now and I'm departing that residence and purchasing another property and I'm using my VA home loan, the benefit is that with a CMA, I can actually offset my mortgage payment without any additional reserves, now without anything else other than a CMA, and then purchase the next property. So that there's big benefits to that. The VA does not offer reverse mortgages. That is a good one. Someone asked, so can you confirm that on one VA loan, you can seed entitlement with 0 down? Yes. Again, so if you want to purchase a $5 million property with no money down, you can do that as long as you have your full entitlement at the time of closing. Because the one question that we do get a lot of from veterans and realtors is that if I currently own a property, but I'm listing it, but it hasn't sold yet, but I want to get qualified for a mortgage and use my full entitlement. The way that works is that the lender will make it subject to selling the other property for your full entitlement. And yes, you can use any proceeds you have from the sale of the property as a down payment for the new property. And if you're purchasing a multifamily, because you can do that with a VA loan up to 4 units, if you have enough 6 months of principal, interest, tax, and insurance after all closing costs have been paid for, then you can actually qualify with rental income and a property management agreement to purchase a multifamily, where in the past, they said that you had to have 2 years of property management experience that was on your taxes. Here, do you gross up BAS and BAH, basic allowance for subsidies and basic allowance for housing? Yes, VA loans gross up non-taxable income by 25%. Which leads me to veterans are able to purchase properties. So some veterans have 100% permanent and total disability ratings or just have VA disabilities in general. You can use sole income of VA disability to qualify for a VA home loan. We do it all the time. Furthermore, a veteran could be unemployed, but a spouse is gainfully employed. They can still use their VA loan and not have any income and qualify for the VA home loan, but they have to be married. Anybody could be on a VA home loan. Veteran by themselves is pretty straightforward. Veteran and a spouse is straightforward. They're treated as one. A veteran and a veteran, it's called a joint home loan application. So me and another veteran split our benefits down the middle, purchase a property. Technically, if 2 of us go in on a purchase, we can buy a 6-unit building plus a commercial space. I've never seen it done, but the VA handbook allows for it. And then you could have a veteran and a non-veteran also purchase a property together, but it would require a 12.5% down payment from the non-veteran. The reason it's 12.5%, if you remember earlier, I said that basically the VA guarantees 25% of a loan. So if the VA is going to guarantee half of that, which is 12.5% of the veteran section, the non-veteran has to be able to do 12.5%. You can't do joint loan applications on assumable loans unless you lock in the seller's benefits, because you can't put a down payment on an assumable loan. You could do 100% construction loans with VA loans as well. That includes land acquisition and building, though. I don't do those, but I refer those out to other people that do them. But that's another great thing that you can that people can do. How do you treat a fiance on an application? That's a great question. They're treated as a just a civilian joint home loan application. So veteran and non-veteran, 12.5% down payment. No pressure, but we tell people, like, if you want to use the full benefits, then you'll be able to, then you would have to get at least court married a week before closing. And like I said, if you guys have questions, you guys can always schedule a call with me, shoot me an email, probably the easiest thing to do, and I'll be able to walk you through it. But the condo piece is a pretty big one. That a lot of veterans do struggle with. Oh, one thing I wanted to mention about the VA disability thing, that you can gross that up by 125%. So you can give them more income to qualify for DTI ratios. But another thing is property tax breaks. So depending on what state you're in, or county and state, veterans that meet a certain VA disability criteria also don't have to pay for property taxes. And veterans can qualify for property without property taxes for the purposes of buying a property if they meet that criteria. So that is another thing that opens up the door for a lot of veterans to be able to be homeowners. And no, you don't need to use a VA loan to get the tax break. You just need to be on the title of the property. So one big thing that people will do is, let's say you have family, like, father, mother, whatever. They have a VA disability rating that meets the criteria. They live with you. You can add them to the title of the property and you can get the exemption. So it's another way to be able to save money. Oh, this is a good one. How long does a veteran need to hold the property before they can rent it? There's no requirement. This could be 1 day. And that's, people will tell you how, everyone tells me it's a year. That's a FHA rule. That's not a VA rule. VA has 0 days. They can buy it, and then next week you're like, I don't want to, I don't want to live here anymore. We've seen that happen. Another good question. What's the max seller contribution for VA loans? So there's two parts to this. One, there's no limit on closing costs being paid for by a seller. All closing costs can be paid for by a seller. Contribution is 4%. 4% is something that's not standard to be paid for by a seller. An example of a seller contribution. Client needs to pay off a car in order to qualify for purchasing the loan. They have a $6,000 balance on their car. They're buying a $500,000 property. The seller gives them a $6,000 seller concession to pay off their personal debt in order to qualify for the VA loan. You could do that. VA loan is the only loan program that allows you to do that. Another part is that if closing costs, let's say we had this happen recently. Someone's buying a $500,000 purchase price, $20,000 in credits. We were $8,000 too much in closing credits. So you could take the $8,000 and apply it towards seller concessions, paid off 2 cars and a credit card. So there's some flexibility that you have with that. But again, all closing costs, including up to 2 discount points, 1% origination fee, could be paid for by the seller as normal closing cost credits, plus an additional 4% towards seller concessions. Someone had a question. When you lock in the veteran's benefit, what happens to the veteran seller? So if you lock in the seller's benefits on an assumption, that veteran will have locked in the that portion of the seller's benefits, but the sellers can still use a VA loan, but it's going to be based on the old rules of max county limit and how much they could qualify for. After the sellers have sold the property, then the original sellers will get their entitlement back. But remember, a VA loan could be unlimitedly, I guess if that's a word, assumed by other people. So if I assume your loan, I could have someone else assume that loan, someone else assume that loan, and so on and so forth. Can you use the additional 4% for additional discount points? Yes, you can. Yeah, you can. We haven't seen that before. Personally, I haven't seen that. Sometimes it's, it may be a good option if you're trying to get to that discount level. But at some point, it just won't make sense. The pricing adjustment it won't make sense. Is you could look at doing a 3-2-1. That's where, let's say the current interest rate is 6%. The sellers can prepay the interest for a 3% interest rate, a 4% interest rate, a 5% interest rate for the buyers. So in this example, I could actually come in, get a place first that's normally 6%, but do my first year 3%, second year 4%, third year 5%, and then at the fourth year it's going to be at 6%. So that is something that you can do with that. Can a non-VA buyer assume? Yeah. So yes, Anita. Yes. Can a non-VA buyer assume a VA loan? Yes, they can, but they do lock in the seller's benefits to the property, and actually have to be very careful of, because they do get a lot of phone calls. Because again, I do a lot of stuff on YouTube for the veteran community. People will be like, I'm a week from closing, and the sellers want to pull out because they didn't realize I'd be locking in their benefits into the property. So we do get a significant amount of those calls where deals fall apart last minute because sellers aren't informed of the process. Oh, so someone asked, lock in what? So if a veteran uses a VA loan, they have benefits, entitlement in a property. So if I use my VA loan on my house that I bought, and a non-veteran comes in, they're going to lock in my entitlement that I have in this property to reuse my VA loan again. That's what's locked in, the entitlement piece. And Anita, also, if you want to schedule a call with me, you can in the link down. I put it in the description. Happy to go over it with you. Yep, I think we're good. Thanks, everybody.